Good evening, good afternoon, good morning to everyone. It's my pleasure to welcome you back to this new session of the Green Swan Conference 2022, devoted to monetary policy. We'll first have a panel and then a lecture. James, you will be chairing the panel and the lecture, and I leave you the floor.
Thank you very much, Sean. So I'm James Talbot. I'm Director of International at the Bank of England, and it's my great pleasure to be chairing this session today. In terms of the purpose of the session, just to give some background, many central banks have started to or are planning to take account of climate-related risks in their monetary policy operations. There are a range of reasons that can motivate this greening, including to mitigate risks to balance sheets, to mitigate risk to financial stability, or to actively incentivize the transition to net zero. And policy designs may differ according to the weight placed on each of these aims, and will also relate closely to the individual characteristics of a given jurisdiction. And given that heterogeneity, one of the most helpful things, in my view, is for the central banks to come together to share experiences and discuss how they've chosen their specific approaches, the challenges and the lessons they've learned in making these changes. And hopefully this will enhance our collective understanding in what I think is an emerging field for central banks. So in that respect, I'm really pleased to have a really excellent panel today. I'm joined by Ms. Takiko Shimizu, who's the Assistant Governor at the Bank of Japan. I'm joined also by Ms. Fernanda Guardado, who is Deputy Governor for International Affairs and Corporate Risks at the Central Bank of Brazil. Also, Mr. Liu Zhang, who's Deputy Secretary General of the Monetary Policy Committee at the People's Bank of China. And finally, Mr. Ivan Ordonat, who is Deputy Director General of Financial Stability and Operations at the Banque de France. The panel today will consist of 2 rounds of discussion, and I'll ask the panelists to keep their interventions in each of the rounds to roughly 5 minutes. So let me start with the first round of questions, and I'm going to ask each panelist in turn to outline what actions your central bank has taken so far to green your operations, what's been the motivation for you to do so, and what's your experience been with making those changes. So let me start with Takiko. So over to you, please.
Thank you, James. So it's a great pleasure to join you today to discuss the Bank of Japan's response to climate change. So the Bank of Japan, with its mandate of achieving price stability and ensuring the stability of financial system, has been fostering its efforts on climate change and adopted the comprehensive strategy in July 2021. The strategy consists of different measures in multiple areas, so monetary policy, financial system, research, international finance, and operations and communications. So given today's agenda, let me focus on monetary policy. In particular, the Bank of Japan's climate response financing operations, which is a funds for lending scheme that supports the financial institutions' efforts to address climate change. The outline of the scheme was decided at the monetary policy meeting held in July 2021. So, what's the purpose of this operation? The purpose is to provide funds to financial institutions within the amount outstanding of their investment or loans that contribute to Japan's actions to address climate change, with a view to supporting private sector efforts on climate change. We view that unlocking massive private finance is crucial in achieving net zero. So what are the eligible loans and investments? So wide-ranging loans and investments, including green loans and bonds, sustainability-linked loans and bonds, and transition finance, and are eligible. What's the duration of the loans provided to financial institutions? 1 year, but financial institutions can choose to roll over the borrowings until 2030. So therefore, practically speaking, it is a long-term financing. So what's the interest rate applied? 0%. Moreover, the funds provided through the operation are exempted from negative interest rate charge, which is currently applied for current account deposits at the Bank of Japan at minus 0.1%. Who are eligible counterparties? In addition to the usual eligibility requirements, that is, having a current account at the Bank of Japan and being sufficiently credit-worthy, eligible financial institutions are required to disclose a certain level of information regarding their efforts to address climate change, which includes 4 thematic areas. So governance, strategy, risk management, and metrics and targets in the recommendation of TCFD. The characteristics and uniqueness of the funds for lending scheme is that counterparties make investments and loans based on their own decisions, and that discipline is exercised through a certain level of disclosure. So the first disbursement of this climate response financing operations already took place in December 2021. The total amount of loans disbursed was a little more than 2 trillion yen, which is close to 20 billion US dollars. The number of eligible financial institutions were 43 at that time, which included large financial groups in Japan, as well as regional banks and trust banks. The auction and disbursement will be, in principle, conducted biannually, and the next auction is planned to take place this July. Ahead of the next auction, we are now accepting additional applications for eligible financial institutions. As large financial groups are already eligible, so additional applications, if any, are likely to come from regional banks. Should more regional banks become eligible, funds from our operations would become more reachable to small and medium-sized enterprises. Let me stop here. Thank you, Jim.
Thank you very much, Takiko, for those opening remarks. Next, we'll turn to Fernanda, please. Thank you.
The BIS, the PBOC, and the NGFS for inviting me to this very interesting panel. Very important discussion we're having today. As we all know, climate change and sustainability issues have the potential to impact even further some of the central bank's core responsibilities, which is price and financial stability. Specifically in the case of Brazil, especially in the past couple of years, we have had rainfall well below average since about 2012, and this has subtracted about 1.5 percentage points per year of Brazilian GDP. And how is that possible? What actually, look at what happened last year. Last year, rainfall proved especially dramatic, and we had rainfall 25% below the 1980-2019 average. And that created a lot of distress for the country's energy supply. And we also saw this drought reducing sugarcane production by about 15%. So we have had rainfall consistently below average, and this unfavorable and persistent supply shock has had relevant implications for the economy, and particularly for prices of imported staples such as energy and food, especially when you take into account that almost 70% of the electric power generation in Brazil comes from electric sources. Also, agribusiness GDP in Brazil accounts for a big share and has had important has had an importance in the Brazilian economic cycles. So, water scarcity flag that was introduced last year in Brazil meant an increase of almost 50% over the previous flag, so over the previous price flag. And as shown in our inflation report in December 2021, contributed 67 basis points for the deviation of inflation in relation to the target. We have been overshooting the target for a while now, and prices of staples, especially energy and food, have been big villains in this outcome. So the shock has been compounded by the rise in food prices, both for tradable and non-tradable items. We can therefore see that climate and environmental risks are growingly incorporated into policymakers' thinking and decisions, and they are reflecting the growing risks that they pose to inflation and financial stability. We also see how households and firms are responding to the climate change. We have seen how shocks have become more frequent, how climate change impacts prices and supply chains, and how supply chains can be a big issue, and the financial sector has been responding to that through their investment decisions. So climate change is having an important effect on the economy, and it is therefore in central banks' interest to fully understand how these transmission challenges will evolve. I believe that even having a lot more to be done, we are on the right track on this issue. The Central Bank of Brazil's experience of bringing sustainability issues to its strategic agenda has been quite successful. We had a track record of ESG regulations published on important topics in the past. But after 2020, the BCB decided to gradually strengthen its approach towards many aspects of the green agenda: policies and instruments, new regulation and supervision practices, partnerships, and internal measures, such as a complete revamping of the BCB's internal socio-environmental responsibility policy. In early February 2021, the BCB revised its integrated risk management policy, officially bringing the risk management and monitoring of social environmental risk within the scope of the central bank. Still in 2021, the central bank included green bonds as an asset class in its investment universe, and these papers became part of our strategic portfolio of FX reserves. Positive results were quickly achieved on the regulation and supervision front, though through a regular dialogue with financial institutions and the whole financial sector. Disclosure and transparency practice and the climate-related risk management agenda evolved swiftly. In the era of supervision, I would like to point out structuring broadening of the scope for collecting information on social, environmental, and climate-related risks in financial institutions, improving the monitoring of climate risks and stress tests. We are currently working towards publishing the first climate risk evaluation exercise for the national financial system in our next financial stability report, to be released soon. This exercise will be made up of two parts. The first one will be a mapping of credit exposures according to the transition risk of the borrower, and the second will be a sensitivity analysis that will be focused on physical risks related to extreme droughts, using the climate scenarios developed by the Brazilian National Institute for Space Research, INPE. In this analysis, the BCB will measure the banking system's credit exposure to the drought risk. As a next step, the BCB will do sensitivity analysis that will take into account other types of events such as floods. In addition, the BCB is evaluating using the NGFS scenarios in its futures exercises. Regarding regulation, the BCB has sought to dialogue with society through public consultations. In 2021, two important issues were regulated after being the object of a public consultation. The first one was the ESG risk management policy, and the second one, the disclosure of ESG policies based on TCFD recommendations. The former extends regulatory requirements applicable to the management of traditional risks to social, environmental, and climate-related risks. Furthermore, it also establishes an integrated risk management. The latter improves the requirements for implementing a transparent and standardized reporting of social, environmental, and climate risks and opportunities of financial institutions. One of the ECB's most important ongoing actions, though, is the implementation of a sustainable rural credit bureau, also known as the Green Bureau. This measure seeks to define sustainability criteria applicable to rural credit concessions, which allows the identification of rural credit operations that have certain social, environmental, or climatic characteristics, thus facilitating data collection and comparison. The Green Bureau is also a tool for risk management by financial institutions and an important step towards the development of a green bond market, as well as the securitization of these green credit operations. Guided by the principles of open finance, it will allow beneficiaries of rural credit to share their information with any interested party without the need for intermediation by financial agents. This data sharing will allow for better asset pricing, which will benefit credit conditions and provide incentives for the adoption of practice with social, environmental, or climatic characteristics. In other words, it could be the starting point for a green taxonomy of rural credit operations in Brazil. The publication of the first report on social, environmental, and climate-related risks in September 2021 was another important milestone. Not only does the document addresses the BCB sustainability actions in an integrated way, but it also strengthens the communication on a set of rule, practice, and projects that the BCB that have the objective of the better management of social, environmental, and climate-related risks, both internally and within the national financial system. The report is aligned with recommendations outlined in the documents published by the World Economic Forum, the TCFD, and the NGFS. Lastly, the report will allow the BCB to remain at the forefront of this important topic and increase this transparency and accountability. I'll stop now. Thank you.
Thanks very much, Fernanda, for telling us about what the Central Bank of Brazil is doing. Next, I will turn to Liu Zheng to tell us about the PBOC's experience in this regard. Thank you.
Chair, it's my great honor to be part of this panel. As we know, achieving the goals of carbon peak and neutrality will be a difficult challenge to China, because the curve of decarbonization will be steep. So the government has worked out a systematic package of guidelines. Monetary policy is only a part of this bigger picture. From the perspective of monetary policy, we always focus on the green transition's influence on macroeconomy. For example, some research institutions estimate that China needs to invest about 130 trillion yuan. That means $20 trillion in green sector before 2060. And the underlying inflation level may be lifted up during this greening process. In the implementation of monetary policy, we pay attention to the details. We notice that in practice, central banks mainly focus on collateral management framework, green asset purchase, lending facility, and so on. As early as 2018, PBC has also included high-quality green bonds and loans as qualified collateral for the medium-term lending facility, which provides medium-term liquidity to the banking system. In November last year, PBC further launched 2 structural monetary policy tools supporting the green transition. From my perspective, there were mainly 2 considerations in designing. One is that bank credit is the main channel in China's financial system. The other, green transition is a profound structural reform for the economy and the society. Hence, structural policies should be given full play. About the first two, carbon emission reduction lending facility, focusing on supporting clean energy, energy conservation, environmental protection, and the carbon reduction technologies. There is a two-layer system in the credit offering process. Firstly is commercial banks first issue carbon reduction loans to the real economy. Then the PBC offers low-cost funds to commercial banks. The facility requires banks to disclose information on their websites quarterly about loan amount, interest rate, supporting project numbers, and especially the quantity of carbon reductions. PBC will verify the information disclosure together with other ministries and third-party institutions, while the National Audit Office is responsible for auditing and supervision. About the second two, we created a special central bank lending program for clean and efficient coal use. Coal is still very important for China. Last year, a short period of electricity shortage happened in China, partly due to cutting coal production. So we bear in mind a principle of construction before destruction in green transition to ensure energy security and economy stability. After that, PBC launched a special central bank lending program for clean and efficient coal use to support 7 related fields. By the end of April, PBC has issued about 160 billion yuan, that means $25 billion in total for the two monetary policy tools. These funds enabled banks to issue more than 250 billion yuan, nearly $40 billion of loans to the related fields. The carbon emission reduction facility has been issued by 138 billion yuan, which helps reduce carbon emissions by 48 million tons annually, accounting for about 0.5% of China's annual carbon emissions. Thank you.
Thank you very much for outlining what the PBC has been doing in this space. So next we'll turn to Ivan to say a little bit about what the Banque de France has been doing. Ivan.
Thank you, James. Well, it's not only the Banque de France, I must say, it's the Eurosystem, the ECB, and the 19 national central banks participating in the Eurosystem. The starting point for us is this basic idea. Climate change can cause both upward pressures on prices and a slowdown in the activity. So with this in mind, we have the conviction that we must incorporate climate change in our monetary policy in the very name of price stability of objective, that is to prevent this type of situation, which is potentially difficult for the central bank to manage. There is a second aspect to consider as well, which is that climate risk itself is a source of financial risk that could impair the transmission mechanism. So the conclusion is that we must integrate climate risk in our monetary policy operations as well. So for us, the question is no longer should we integrate climate considerations in our monetary policy. The question is rather how to do it. And in line with this conviction and this goal, in July of last year, the Eurosystem adopted an ambitious, I would say, action plan to further incorporate climate change considerations in its monetary policy framework that followed the strategy review we undertook as well, starting from 2020, and that was part of the conclusion of the strategy review. So if we come to the action plan itself, it comprises a broad set of building blocks with the aim actually of preparing the grounds for the implementation of monetary policy. So it's not per se defining measures, it's more a preparatory work. And from that, we see if some measures make sense or not. And the idea is to prepare this over the next few years by 2020-24. So if I try to be a little bit more concrete, these building blocks include the following. So there is obviously macroeconomic modeling, and together with that, the assessment of what it means for the monetary policy transmission. The idea is here, for instance, when you prepare forecasts to integrate in the common set of assumptions proxies for carbon price, like the ETS allowance prices. The idea also is to take into account the impact on the macroeconomic outcome of climate change policies. That's good to give a few examples. And going further, it's making sure that climate considerations are part of the regular discussion on GDP nowcasting and prices nowcasting. So that's for the, let's say, the model building block. There is a second aspect which tackle more the data themselves, statistical data you need to perform analysis of climate change risk and its consequences. I mean, this is a topic for everybody. We might come back later on that, but keep in mind that this is a huge part of the work we are doing, trying to ensure that we can base our work on actual data in a coordinated way. The next aspect or item to deal with is disclosure. There is a need for actually the central banks to be transparent on the risk that are attached in these balance sheets, that are attached to climate risk, like we ask banks or financial institutions to do it. So disclosure is an important aspect of the work. Keep in mind that I think today in the Eurosystem, you already have a number of central banks disclosing what they do for their own funds portfolios. The aim is to disclose more about our monetary policy portfolios and operations. Then if we dig further into the operations and the collateral framework, there are different aspects to consider. Collateral has to be valued, so the valuation of collateral is one important work stream. The question is, to which extent market prices reflect climate risk? I mean, this is a discussion. You have different views on that. But if the conviction is that market price or markets do not integrate correctly market prices, so you have to take this into account in your collateral frameworks, in the way you design the haircut schedule, and you may imagine differentiated haircuts depending on the carbon footprint attached to the assets you take as collateral. And I mean, the same goes for asset purchases, focusing more on corporate asset purchases. This is something that is part of our monetary policy framework as of today, as part of the quantitative easing. So the idea is, again, to see to which extent we can take into account the carbon footprint of the assets to make a differentiation and focus more on the assets that are reflecting activities with a low carbon footprint. There is a final aspect for this huge list, which concerns the risk assessment capabilities. You may know that in the Eurosystem, a number of central banks are running their own credit assessment capabilities, focusing on corporate assets that are taken as a guarantee. This is what we call the ICASs, so internal capacity assessment systems, and the goal here is to see to which extent we are able to integrate climate risk in the ratings we attach to the assets that we take as collateral, or to the assets that we purchase. So this is a long list, ambitious list. The priority still is to control the risk to which the balance sheet of the Eurosystem is exposed, with a focus on collateral and asset purchase programs. But by protecting the balance sheet, we believe that we will contribute to the financing of the least emitting activities in the Eurozone economy. So that's the plan in a nutshell. And as said, it's a plan for the medium term, and we will continue this over the years up to 2024. Thank you.
Thank you, Ivan. And I might just add a quick word on what we've been doing in this space at the Bank of England. So the bank's Monetary Policy Committee has always had a secondary objective to support the economic strategy of the UK government. And last year, we had an updated remit, which confirmed that this secondary objective should in future include supporting the government's aim to transition the UK economy to net zero. And so that mandate change required us to green our own corporate bond purchase scheme. Under that scheme, the Bank of England purchases investment grade sterling corporate bonds issued by companies judged to make a material contribution to UK economic activity. The scheme was introduced in 2016, and it's an asset purchase tool used for monetary policy purposes. So the change we made was to take account of the climate performance of companies whose debt was eligible for purchase, therefore hopefully sharpening their incentives to take actions which will contribute to the transition to net zero. Given that this scheme holds only around 6% of the sterling corporate bond market, we tried for an approach that would sharpen incentives both directly via our purchases and also indirectly by its influence on the approach of larger private investors as well. In addition, since these purchases are conducted by the Bank of England in order to meet our inflation target, the bank had attempted to take a market neutral approach by replicating the structure of the market itself so as to avoid affecting relative borrowing costs. However, there is, I think, increasingly persuasive evidence that climate risk is systematically underpriced in financial markets. And that means that continuing to replicate the overall structure of the sterling corporate bond market in our purchases and holdings is perhaps no longer could be considered a market neutral approach. And so with that in mind, we've put this approach into action in several ways. First, firms need to satisfy climate-related eligibility criteria for the bonds that we purchase under the corporate bond purchase scheme, with our purchases being tilted towards those eligible firms that are the stronger climate performers within their sectors. Our approach was also designed to be consistent with targeting a 25% reduction in the carbon intensity of our holdings by 2025, and getting to full alignment with net zero by 2050. The requirements we put on firms will also increase over time, and actions including reduced purchases, removal of eligibility, or even divestment will be taken against weaker performers. Our approach to greening was implemented first via a reinvestment round of our corporate bond holdings, which started in Q4 and ran into early this year. A few months ago, the MPC decided to begin reducing the size of the corporate bond purchase scheme for monetary policy reasons. However, we hope that our work and the reinvestment round that we did at the end of last year has provided a good proof of concept. And the underlying analysis behind what we did is also explained in a discussion paper on our website. So let me stop there in terms of what the Bank of England's done. But what I wanted to do next was to come back to the panel and ask some follow-up questions. And I'm going to start with a question for Takiko and a question for Liu. So Takiko, the question I wanted to ask you is whether you could say a little bit more about why the Bank of Japan chose a funds for lending scheme. I think you mentioned that discipline is exercised by requiring counterparties to disclose a certain level of information. Perhaps you could tell us a little bit about what kind of information financial institutions disclose. And then after that, I'll turn to Liu and ask, you mentioned a couple of instruments that were launched by the People's Bank of China to help promote green transition in your opening remarks. And I wondered if you could just provide a little bit more detail about some of the key elements of those schemes. So, for example, their scope, the interest rate, and perhaps a few more details. So I'll turn to Takiko first, and then straight after we'll go to Liu. Thank you.
Thank you, James, for the good questions. The first question, we believe our funds for lending scheme to support financial institutions' efforts to address climate change is very well fitted to Japan's bank-centric financial system. Taking a look at the debt structure of non-financial corporations in Japan, the share of bank loans is way higher than that of debt securities. So in a financial system like Japan, a funds for lending scheme that leverages banking channels with extensive reach to various firms, including SMEs, would be more effective. I believe the same could be said to other parts of the globe, including Southeast Asia, where indirect financing channels are dominant. In so doing, however, it is important to avoid direct involvement in micro-level resource allocation as much as possible. And the second question, given that the scheme is dependent upon counterparties' own investment and loan decisions, having a mechanism to maintain discipline is crucially important. Under the scheme, each counterparty is required to disclose its criteria used to determine which investment or loans contribute to addressing climate change. In line with this requirement, the information disclosed includes relevant standards for sustainable finance referred and specific procedures in verifying the eligibility of investment and loans. As an example, so regarding the procedure, some banks conduct interviews with their customers on the use of funds at first, followed by their internal eligibility check of the loans using relevant standards, such as green loan principles set out by LSTA or loan syndications and trading associations, as well as domestic guidelines, such as green loan sustainability linked loan guidelines prepared by Ministry of the Environment of Japan. Their decision, in principle, is then certified and verified by an external third party. Let me stop here. Thank you.
Okay. Thank you, Chair. For the carbon emission reduction facility, first, the interest rate of funds provided by the PBC to banks is 1.75%. And the interest rate of carbon reduction loans issued by banks is around the loan prime rate, which is the pricing benchmark of the bank's credit market in China. Second, the PBC funds banks with amount to 60% of their qualified carbon reduction loans principal, which means the facility's leverage ratio is 1.67. Third is about the scope. The facility currently supports 21 national banks in the pilot phase and will expand the scope based on the process. Also, second to the special central bank lending for clean and efficient co-use. The interest rate is the same as the first two, but the scope and the leverage are different. Its qualified applicants are 7 large national banks, and the leverage ratio is only 1. As for the amount, a cap of 200 billion yuan was set during its initial stage in November 2021. Because of the global energy market's fluctuation, additional 100 billion yuan is added in May 2022 to support safe coal production and the increase of reserve capacity. Thank you.
Thanks very much. So, I mean, I think what's pretty clear from that first round of interventions is there is a definite range of experience across our central banks. There's some similarities, but there's also some differences in our approaches to greening. And so I think next in the second round, what I'd like to turn to is to ask each panelist again to take about 5 minutes just to outline some of the challenges that you face so far in greening your operations, and also the lessons learned from what you've done. And if you would like to, please also perhaps focus on 1 or 2 of the flagship actions in your jurisdiction that you think are necessary to come in the future as well. So let me use the same order that we used in the first round. So I'm going to start with Takiko.
Yes, thank you. So there are various considerations to make should central banks decide to introduce measures to respond to climate change. One is an issue of market neutrality, just James described as a challenge for Bank of England for the corporate bond purchases. So let me share our thoughts on this. I think that market neutrality needs to be interpreted with some latitude. So when focusing on climate change issues, there is the question whether the neutrality of resource allocation is ensured simply by treating existing investmental loans equally. If private sector investmental loans are decided without taking into account the externalities, does this not affect the neutrality of resource allocation? If there were a portfolio comprising private sector investmental loans that took into account the consideration, these externalities, it may be socially desirable for central banks to provide funds to correspond to such a portfolio. So society as a whole has been tackling the negative externalities by intensifying efforts to address climate change. As this trend is expected to continue, providing support for such society-wide initiatives can be interpreted as falling within the broad definition of market neutrality. However, central banks are challenged to devise ways to avoid involvement in specific resource allocations as much as possible. In this regard, under the climate response financing operations, the Bank of Japan leaves concrete decisions to financial institutions regarding what kind of investment and loans to make. So in this way, banks' direct involvement in micro-level resource allocation can be avoided. Furthermore, the ideas, standards, and definitions of transition finance are still in the process of formulation. So establishing specific guidelines that are interoperable across jurisdictions is important, but not an easy task. So given this uncertainty, policy tools that can be respond in a flexible manner would be desirable. So let me stop here.
Thanks, Takiko. Certainly some common challenges that we have across our two central banks, as you said there. Let me turn next to Fernanda, please. Thank you.
Thank you, James. Well, it's undeniable that at least our first challenges have been successfully overcome, which was raising the awareness for climate risk among the central bank's community. That's very important because the solutions to these challenges, they will demand a global dialogue. But we are fast approaching another decisive moment as central banks are scratching the limits of their mandates on the sustainability agenda. How further can we go, or how further should we go? And this is even trickier when we are talking about the need to foster sustainable finance and well further on the transition finance front. So we are very aware that Brazil in particular, but the whole Latin American region can have huge opportunities in their huge needs for investment on transition and climate adaptation in our continent. And we think that there's a lot of opportunities out there on sustainable finance that can help to galvanize our efforts in that direction. But from the point of view of central banks that are looking into establishing green liquidity lines, which use green bonds as preferred collateral, or that want to increase the share of their FX reserves portfolio into green and sustainability-linked bonds, some important obstacles remain. I will mention three. The first one is data, the second one is benchmarks, and the third one is taxonomy. So James was touching on the efforts by the Bank of England and discriminating between corporates based on their sustainability efforts, for example. This is something that our mandate kind of limits us here in Brazil. We're kind of limited by law on how much we can do on this discrimination front without using benchmarks or rating agencies and so on. So this is one limit that we start from. But going back to my previous remarks, so the lack of aggregate, standardized, and long data means that it's harder to establish risk parameters and comparability to the market. The lack of benchmark yield curve for green or sustainability-linked assets also limits the comparability to more usual debt instruments, as well as the appropriate risk-return calculations and the acceptance of these assets in standing facilities, such as the ones we have, our liquidity standing facility, that use automated procedures for collateral acceptance. So I'm talking here about the domestic market, right, for the acceptance of these assets. So unlike what James mentioned on the BOE, we do not have the manpower yet, and even the authorization by law to discriminate companies just based on their efforts without having a more direct measure of their credit rating stance and how solid they are, because we have all these automated procedures for collateral acceptance, for asset choice in our portfolios, and the lack of data, long-standing data, the lack of benchmarks really hinders some of the efforts we're trying to make on that front. In that direction, the lack of standardization in the classification system of sustainable and green assets, and that's taxonomy, is one of the main challenges for deepening and maturing the sustainable finance market. This is both for the choice of assets in our FX portfolios, but also for the efforts we're trying to do on domestic assets that are green or sustainability linked. Defining the taxonomy is essential to have a common global standard that's easily verifiable, trusted, and comparable. And I think Tokiko's points went into that direction as well. And that would allow central banks to have a more confident adoption of these assets in their balance sheets. A standardized minimum taxonomy would foster a better understanding of the impact of these implemented actions, thus reducing asymmetries and conflicting views of the same practices. The resulting taxonomy and standardization could generate a virtuous cycle and accelerate changes in the financial system. So central banks can have an important role, but we need to adjust the speed of our agendas to the ones from other relevant players. I believe that a dialogue with standard setter bodies and international fora such as the G20, the ISSB, and the FSB can help greatly in this endeavor. But as always on this agenda, we must move fast and we must, coordinate and talk with each other.
Thanks very much, Fernanda, for sharing those challenges. And I would definitely echo your remark about adjusting to what other relevant players are doing, and your points about the importance of global standards in this area for central banks. Very, very important, I think. Let me turn next to Liu Zheng with the same question, please. Thanks.
Thanks, James. Maybe we don't have enough experiences from November last year to now. I'd like to share several points about the mechanisms in these tools. Our overall goal is to ensure incentive compatibility and risk sharing. First, the incentive mechanism. We're using relatively low-cost funds to encourage commercial banks to provide low-cost credit to the green transition sectors, and establishing punish rules to avoid greenwashing or other violations. Second, the market mechanism. Commercial banks make independent decision in loan issuance, enterprises selection, project identification, and carbon reduction accounting. And collaterals are required when applying for central bank support. PBC provides funds for banks rather than directly for the real sector, which minimizes credit risks for the central bank. These measures not only help avoid market distortion, but also maintain the health of the central bank balance sheet. Third, the supervision mechanism. We introduced a principle of loan first and the lending facility later, which improved the accuracy of fund flow. In the meantime, commercial banks are required to establish a strict bookkeeping system, which assures each loan is well recorded. In practice, we choose several provincial level branches to carry out the preliminary examination, and then we make the final decision. Fourth, the cooperation mechanism. PBC has been working together with other ministries of the State Council on many fronts to ensure that monetary policy coordinates well with industrial, regulatory, environmental policies, and so on. The effective cooperation helps us gain universal support to promote the green transition of the whole society. Despite of these mechanisms, we still face some major challenges in the future. First, what the boundary of monetary policy in supporting green transition. Green transition is a specialized field, a long-run process, and needs relatively strong push. So monetary policy support shouldn't replace the function of market mechanism and not replace the transition actions of the real sector. Besides, it's very challenging for monetary policy to sustain such a long-run support to green sectors in quantity and price. We should also be careful in dealing with the relationship between green supported tools and other monetary policies. Second, how to avoid moral hazard. For fair and efficient implementation, different kinds of moral hazard problems should be noticed in practice, like greenwashing, low-cost fund arbitrage, and green project fraud. Transparent information disclosure and stricter supervision are also needed through designing and implementing green monetary policy tools. Third, how to balance the green transition and the energy supply. I believe the principle of construction before destruction should be upheld. That's why the PBC has launched two tools simultaneously, one for carbon reduction, and on the other hand, for clean and efficient co-use. In the future, this balance will still face challenges, and the ideal path should be a steady transition with limited impacts on energy supply and economic stability. Thank you. Jay.
Thanks, Liu. What's clear from your remarks there is the balance between monetary policy and other parts of government, and also the balancing of the transition with other considerations. So thank you for those remarks. Let me turn next to Ivan with the same question, please. Thank you.
Thank you, James. Well, as the colleague have said, the challenges are quite numerous. There are a number of them, but I believe that they are surmountable. Climate risks for the financial sector are complex, and we must acknowledge that understanding is still at an early stage, I believe. And with this in mind, perhaps the most urgent need is better information to improve our understanding and our ability to analyze climate-related risks. So better disclosure by companies, by institutions can help provide this information base, I believe. Disclosure goes hand in hand with the harmonization of the regulatory framework. I think Tokito said that if you want to make a sense of the reports, to compare them, to aggregate the data so that you have a set of harmonized data you can play with, you need harmonization of the regulatory framework. And that is why the new European regulation on taxonomy, on the reporting by corporations, the so-called Corporate Sustainability Reporting Directive, are most welcome. But the truth is that it's a lengthy process, and I believe that all this setup won't be ready before 2024. So it's a long process. That said, when it comes to the let's say the practical issues, analytical issues, there are two types of challenges or additional challenges, I would say. First is the data gaps. So as of today, and irrespective of what the progress expected from the disclosure, so data gaps. And data gaps means that in our work today, we have a lot of discussion on the accuracy and the ability of the data required to assess carbon footprint. We have performed the procurement to select some databases. Actually, 2 of them produced in I think by European providers. And the aim is simply to use them for our work. I mean, what we have to do is to produce usable figures for the entire system, so that we no longer have to discuss about methodologies or accuracy of data, but more about the substance. So that's for the data. But there is another aspect, which is the risk quantification. Climate risk is a long-term risk. And at the same time, many of our risk measures are based on short to medium-term indicators. So there is a real technical challenge here. That is our ability to compute the probability of default going beyond 1 year horizon, ability to make economic forecast beyond the regular 2 to 3 years horizon. And so the work to be done, I think, is to extend our measures, and it's ongoing. That goes with the modeling building blocks I was mentioning earlier. But modeling the effect of climate change on prices and growth also requires relevant scenarios. And we intend to perform this year in the Eurozone climate change risk-based stress tests using the NGFS scenarios. But the truth, I believe, is that these existing scenarios might not be adverse enough. So there is further work probably for the NGFS as a whole to deliver scenarios that are more adverse. I think the work is ongoing, and we expect this to come soon. Then once you have this, you have to implement, to actually try to reduce your exposure to climate risks. And to do that, we must be able to measure the additional financial risk that is related to climate risk, remove it from our asset portfolios or for collateral pools. And at this stage, you face 2 questions. First question is about the scope. I mean, when you say there is a focus on the corporate sector, it makes sense because the emitting sector by essence is a corporate sector. But what about sovereigns? The question may be asked, but there are two issues here. One, of course, is that we do not expect sovereigns or the general government to be among the stronger emitters. But there is also a political challenge, at least in the context of the Eurozone. We have 19 different governments. Each of them are taking measures to ensure the transition, the zero net transition. And assessing the efficiency of these policies, sort of rating what governments are doing, is obviously not so easy in this context. So I think wisely, I believe the focus is on the corporate sector. The second question is about the method to measure climate risk. We don't know for sure. Should we use stress test? As I said, there is an ongoing exercise in the Eurozone. We've done it at the French level. So one idea would be to use the result of the stress test to have a proxy of climate risks. You can also approach the issue by using a climate alignment method and actually tilt, for instance, the portfolios towards the corporate assets that are coming from sectors with carbon emissions the closest from the 2 degree goal of the Paris Agreement. And finally, a third aspect, I mean, the one I personally prefer, but it's probably the most difficult one, is valuation. As I said, if you believe that market prices do not reflect correctly the climate risk, you have to adjust the value of the assets. But how to do that? You can think of introducing a markdown or a markup, depending on the type of adjustment you need to make in order to adjust for this. But the question is on which type of indicators you should base this type of markdowns. This is something we are also working on. So in a nutshell, there are a number of challenges, political, technical. They are surmountable. And overall, we have managed, we have started to work, let's say, at the autumn of last year. And as of today, we have managed to put together a package that will be submitted to the ECB Governing Council soon for a decision on what we think the adequate measures should be in order to start the sort of greening of the Eurosystem balance sheet in the next few months. Thank you, James.
Thanks, Yvan. It's great to hear about the progress that's being made on the issues that you mentioned. And let me just sort of finish on my side by just echoing some of the points raised by the panelists. I mean, I think on our side, the main challenge here has been on data gaps and data quality, which is a point that Yvan just mentioned. We found that it's not been straightforward to ensure that purportedly similar metrics of firms' emissions and carbon intensity across different providers are consistent. And I think we've also faced trade-offs between having conceptually the right measure to use and data quality as well. And I think taken together, this serves to underscore the value of having widely reported, comparable and consistent disclosures, such as those based on the TCFD framework, which Fernanda mentioned earlier. I think it's also been hard to get robust forward-looking metrics to capture a firm's intended reduction in its carbon carbon footprint. There are some third parties that produce metrics assessing firms' climate transition performance, but we found that coverage is partial, and on balance for our own approach, we concluded it was too soon to use those metrics as a basis for investing public money at this time, and we would definitely welcome further enhancements in the coverage of those metrics going forwards. And perhaps finally, a couple of learnings from our side. I think that what we've learned is while the data is imperfect, we can't wait for the perfect data. We need to design flexible approaches that are as robust as possible to what we have at the moment. And then secondly, our work has definitely been very helpfully informed by our discussions with other central banks, particularly via the Network for Greening the Financial System. And I'm really hopeful that this sort of knowledge sharing will be a feature of our work under the monetary policy work stream of the NGFS going forwards. So let me conclude by just asking a couple of follow-up questions to other panel members from what we've just talked about. First, for Fernanda, you mentioned that emerging market countries like Brazil can benefit enormously from greater clarity and incentives for sustainable finance. Perhaps you could just say a little bit more about what you think can be done to unlock those opportunities. And then for Yvan, while the responsibility for climate policy ultimately sits with governments, there are still a lot of expectations on the role of central banks and monetary policy in the fight against climate change. And so I just wanted to ask you how we can make sure that our actions are up to the task when it comes to playing our part. So Fernanda, I'll turn to you first.
Thank you, James, for the excellent question. Well, there's still no global standard taxonomy of what is sustainable, right? So actually what we have nowadays is a host of different taxonomies for different countries. And while this development highlights the effort to advance sustainable finance all over the world and the need to reflect each economy's characteristics in market regulation, it also creates difficulties in developing an integrated market in a global level. This fragmentation in taxonomies generates a lack of comparability and reliability, as well as highest transaction costs and raises the fear of greenwashing. There is a higher cost as well of monitoring because you don't have this straightforward comparisons between assets. So I believe this needs to be addressed. The centralized consideration and recognition in the market of a taxonomy, at least a minimum taxonomy on most important sectors on what is sustainable finance in the national or international level would provide clarity and guidance for different market participants and would increase the efficiency, transparency, and consistency of financial relationships by reducing risks and costs. With this, it would be possible to reduce the fragmentation of the market and promote attractiveness to investors, national, international, and make it possible for central banks to be bigger players in such market. The elaboration of a new taxonomy, though, would allow the integration on a national level of financial activities with sustainable development priorities. It also can provide a clear basis for aligning public policies and the financial system, identify the allocation of private resources to sustainable development issues, as well as supporting regulators in supervisory and risk prevention activities. The main benefit may be the possibility of identifying sustainable projects and assets in a pragmatic and comparable way, as well as protecting investors from the risk of greenwashing. Another advantage would be the development of the sustainable finance market by stimulating and directing larger pool of resources, especially for socially and environmentally responsible activity and projects, with potential risk reduction in investments, promoting engagement and responsibility of financial market actors. These characteristics have the consequence of facilitating the process of transparency and reporting of information by financial agents and companies, in addition to improving the tracking of resources allocated to sustainable economic activities. In Brazil, there is no official taxonomy, with initiatives coming from different institutions. We believe the central bank can be an important actor to participate in the discussion and galvanize these efforts, and we are trying to do that. But we also recognize that this goes a bit beyond our capabilities. Thank you.
Thanks. We'll go straight to Ivan, please.
Oh, okay. Yeah, thanks. Well, thanks for the question. Financing the transition to a zero net carbon world economy, we know that requires shifting trillions of dollars or euros, whatever, within well, relatively short time frame, actually very short time frame if we want to follow the 2-degree Celsius scenario by the next century. But we are not starting from zero as far as monetary policy is concerned. I think regarding the Eurosystem, the very accommodative monetary policy we have in place today is favoring the financing of the transitions through, well, actually very low interest rates and very abundant liquidity. So that's really the starting point. The investors have a number of facilities there. Now, if we think of the greening the action of the central banks, you see it's not a question of additional easing. It's more about recalibrating the two. So are we doing what we are expected to do? Well, I might refer to the report published by the NGFS in March of last year, technical report, which on different options to introduce climate risk in monetary policy. And what I get from that is that there is no a priori one-size-fits-all option that clearly maximizes the benefits across a number of criteria like monetary policy effectiveness, climate change mitigation, risk protection, operational feasibility. So you have a number of combinations that are possible. If we are in the context of the Eurozone is made of 19 countries. So the Eurosystem represents 19 central banks. So when you are working on how to operate the roadmap, there is obviously a risk of diverging views on defining and setting the operational measures. But the view is that it's very important to agree collectively on some principles, try to avoid reopening endless debates, for instance, the one about the mandate. And as I said, the view today is quite clear. The mandate is there. We have a primary objective of financial stability, of price stability, and this is enough to act. And so, with this in mind, what matters is that the roadmap has been adopted and it has to be implemented. Adapting the monetary policy framework to reflect climate risk is feasible. I mentioned the challenges earlier, but we can overcome them. The work is ongoing, and we are ready to start over the next few months. But well, let me be clear: no decision has been made yet. I'm just talking about the status of the technical work. I think it's ready, and we are ready to operate. Thank you.
Thanks very much, Ivan. And I think we're out of time for this session. So let me just wrap up and conclude by saying a big thank you to each of our panelists today for their input and for sharing the experiences of their central banks in adapting their operations to account for climate change considerations. I think our discussion today has really highlighted the diversity of approaches and options out there for central banks, and also the importance of specific circumstances in shaping the choices that we all make. But there are also some common issues that we share amongst ourselves. And I think while there are challenges and difficulties, and we're at a very early stage in greening our operations, I've definitely heard plenty of encouraging experiences from my fellow panelists today in tackling these issues. So let me finish there, and I'm now going to pass back to Jean. Thank you.
Many thanks, James, and thanks to all the panelists for this very interesting panel. We will now have a very short break and resume in 5 minutes for the lecture given by Markus Brunner-Meyer. So see you all in 5 minutes.
Thank you, Jean.